Today's number is 75 billion, as in $75 billion. That's how much SpaceX wants to raise in its IPO. $75 billion. The previous record for any IPO in history was Saudi Aramco at $29.4 billion in 2019. SpaceX wants to raise more than 2.5 times that. And the whole pitch to investors? Well, you guessed it, AI. Specifically, data centers in orbit. We'll get to that here in a moment. SpaceX just filed its largest IPO in history. And this is not a space story, it's an AI story. Because the entire pitch to investors is AI compute demand is so massive, so insatiable, that we need to put data centers in orbit. Not figuratively, literally in orbit. Meanwhile, the company behind ChatGPT just lost 3 of its most senior leaders in a single week. And Anthropic, the company behind Claude, just pulled the rug out from under 135,000 users who are accessing AI through third-party tools. Trillions going in, leadership teams falling apart, access getting tighter, and a new study that says the average worker can only focus for 13 minutes at a stretch due to AI. It is Monday, and the gap between AI bets and the reality of AI has never been more apparent. I'm Don Michalik, and this is your Morning Intelligence for Monday, April 6, 2026. Here's what we got today. SpaceX absorbed Elon Musk's AI company, xAI, in February. And now it's filed for an IPO that would dwarf every public offering in history, with a pitch built around AI data centers in space. We'll break down what that actually means and why you should care even if you've never thought about SpaceX. OpenAI's leadership bench just collapsed. COO, CMO, and CEO of applications all gone in a single announcement. Weeks before a potential IPO, Anthropic cut off third-party access to Claude, effective immediately, and users are reporting single-day bills in the thousands. And a new study says your focus time at work just hit a 3-year low, with a surprisingly specific number of how much AI time is actually productive. In today's Deep Cut, the 3 biggest AI companies on Earth are all racing to go public at the same time. Combined target valuation, $3.5 trillion. We'll show you the scoreboard here momentarily. And we'll close with a startup that has fewer employees than a baseball team and just sold for $400 million. Let's go ahead and get into it. All right, let's start with our lead story here. Let's start with a number that's hard to wrap your head around, at least it was for me. $1.75 trillion. That's the target valuation for SpaceX's IPO filing, submitted confidently to the SEC last week. To put that into context, Saudi's Aramco's IPO in 2019 raised $29.4 billion, the largest ever. SpaceX wants to raise $75 billion. That's more than 2.5 times the record. Now, you might be thinking, SpaceX, this is an AI show. Why are we leading with a rocket company? Well, because this isn't a rocket story. This is an AI infrastructure story, and here's why. In February, SpaceX absorbed xAI, Elon Musk's artificial intelligence company, in a deal that valued the combined entity at $1.25 trillion. That was already the largest merger in history. And the whole point of that merger was this. SpaceX wants to build data centers in space. Not a metaphor, not a marketing line. SpaceX literally has filed plans with the FCC for up to 1 million satellites designed to function as orbital compute infrastructure. The pitch to investors, AI demand is growing so fast that terrestrial data centers can't keep up. Power grids can't keep up. So you go to space, where you've got a near constant solar energy and natural radiative cooling, no power bills, and no water cooling systems necessary. 21 investment banks are managing the offering. The codename is Project Apex. The public S1 is expected later this month or sometime in May. Listing targeted for June on NASDAQ. So why does this matter? Well, here's why this is the lead on a Monday morning and not just another finance story. Every AI tool you use at work, Think your ChatGPTs, your Claudes, your Geminis, your Copilots. Well, those run on data centers. Those data centers cost billions to build, consume enormous amounts of electricity, and are running out of capacity faster than they can be built. That's why your AI subscriptions keep getting more and more expensive. And that's why Anthropic just cut off third-party access. That's why companies are restricting what you can do with the tools you're already paying for, or they're paying for. SpaceX is betting $75 billion that the solution is to move compute infrastructure off planet. Whether that works or not, and some analysts are skeptical, with at least one Reuters analyst comparing it to Microsoft's abandoned undersea data center project, the fact that a $1.75 trillion company thinks it's the answer tells you everything about the scale of AI demand right about now. The bottom line, when a company files a $1.75 trillion IPO to put data centers in space, that tells you everything you need to know about where demand is heading and why every AI tool you use is going to cost more before it costs less. This is the backdrop for everything else we're covering today. All right, in today's rundown, our first story. The company behind ChatGPT just lost 3 of its most senior leaders in a single announcement, weeks before a potential IPO. Here's what happened. Late last week, OpenAI disclosed that COO Brad Lightcap had been reassigned to quote-unquote special projects. Chief Marketing Officer Kate Rauch is stepping down to focus on her cancer recovery. And Fujisimo, CEO of Applications, the person who ran ChatGPT, is on medical leave for a neuroimmune condition. 3 senior leaders, one announcement, at a company that just raised $122 billion at an $852 billion valuation and is actively preparing to go public. Greg Brockman is absorbing product operations. Other executives are splitting additional duties. But the bench is getting thin, and the timing couldn't be more brutal for OpenAI right now. So what? Well, if ChatGPT is your daily driver at work or at home, the company behind it just lost 3 senior leaders in 1 week, right before going public. Product direction, pricing, and features all flow from leadership stability. And so this isn't necessarily a crisis for OpenAI right now, but it's worth watching what they do and what they announce next. All right, our second story in the rundown. If you use Claude through any other tool other than Anthropic's own apps, your costs just changed dramatically. Effective Friday, April 4th, last week, Claude Pro and Claude Max subscriptions are no longer working through third-party tools. The first tool affected is OpenClaw, which used Claude's API to let users run AI agents at scale through their existing subscriptions. And the numbers really tell the story here. 135,000 instances of OpenClaw gone overnight. Users are reporting what used to cost them a flat monthly fee now runs up from $1,000 to $5,000 in a single day when they try to replicate the same workflow through direct API access. Anthropic offered a one-time credit, 1 month's worth of your plan, and up to 30% off pre-purchase API bundles. The refund window closes on April 17th. And here's the part that should get your attention here. Anthropic said this restriction will extend to all third-party harnesses in the coming weeks. OpenClaw just happened to be first, and obviously it won't be the last, according to Anthropic. So what? Well, again, if you use Claude at work through anything other than Claude AI or the official applications, well, check your billing settings today. Your flat rate plan may no longer cover what you actually use it for, and the bill could be eye-opening. This is the first major AI company to retroactively restrict what paying subscribers can do, and it sets a precedent. So keep an eye on it. All right, our third story in the rundown. The average knowledge worker can now focus for 13 minutes at a stretch. That's a 3-year low, and AI tools are part of the reason. This comes from ActiveTrack. They analyzed 443 million hours of digital work across more than 163,000 employees at over 1,100 companies. Average focus working session, 13 minutes and 7 seconds. That's a 9% decline from 2023. 80% of employees now have access to AI tools, up 52% in just over the last 2 years. Weekend work jumped more than 40%, And here's the stat I want you to remember. The sweet spot for AI usage is 7 to 10% of your total working hours. That's the range where productivity actually goes up. Above that, it starts to decline. Goldman Sachs backed up this separately. They found, and this is a direct quote, no meaningful relationship between AI and productivity at the economy-wide level. So what? Well, here's a number to check against yourself. If you're spending more than 10% of your workday in AI tools, the largest study of its kind says your productivity actually starts to drop. The sweet spot is at 7 to 10%. That's actionable, and that's something you can measure throughout the rest of the week. All right, quick thing before we keep going here. If you're listening to this on your Monday commute and you're thinking, someone on my team really needs to hear this, send it to them. Drop it in a group chat, text it to them, drop it into Slack, whatever is easiest for you. It takes all of 5 seconds, and I genuinely appreciate you helping this show grow. All right, let's get into our deep cut today. $3.5 trillion, 3 companies, 1 race. Let's go ahead and get started. Today's deep cut is the business story behind every product story we've covered this year, and the numbers are absolutely staggering. 3 of the most valuable AI companies on earth are all racing to go public at the same time, and the combined target valuation is roughly $3.5 trillion. Let's take a look at the scoreboard here. We got SpaceX. You just heard the details there. $1.75 trillion target, filed April 1st, listing expected by June. The AI angle is obviously the orbital data centers powered by XAI mergers. OpenAI, currently valued at $852 billion after raising $122 billion, the most money any private company has ever raised. The revenue is just $25 billion annualized, and that's roughly $2 billion a month, but they're spending even faster than that. Not profitable, S1 filing expected within weeks. Their target, roughly $1 trillion at listing. 900 million weekly active users use ChatGPT. And then we got Anthropic, valued at around $60 billion today, but positioning for a $400 to $500 billion IPO. Goldman Sachs and JP Morgan are advising on that one. The target, as early as October of this year. Revenue, $19 billion annualized. And here's the detail that matters there. The gap between OpenAI and Anthropic was massive a year ago. It's now just $6 billion. Now, imagine that, just $6 billion. And Anthropic is closing fast. Now, here's where it gets really interesting. The smart money is already picking sides. Bloomberg reported that 600 million on OpenAI shares couldn't find buyers on secondary markets. At the same time, there's $2 billion in demand waiting for Anthropic shares. Investors are rotating here. And the enterprise data really does back this up. OpenAI's shares of enterprise API market dropped from 50% to 25% over the last year. Anthropic's went from 12 to 32%. The gap hasn't just narrowed here, it's flipped on trajectory. Meanwhile, the broader market is all in. Global VC in Q1 2026 hit $297 billion. 81% of that, again, 81%, went to AI alone. 4 of the 5 largest venture rounds in history closed this past quarter. So I just threw a lot of numbers at you, a lot of stats, a lot of figures. Why is this worth your time? Well, again, here's why this is your deep cut and not just a finance story. Every time ChatGPT changes its pricing, every time Claude restricts access, every time your company gets a new AI feature or loses one, it connects back to this race. All 3 companies are now optimizing for Wall Street. Their decisions about your tools, your pricing, your features, those decisions are being made with investors in mind, not just the end user. The SpaceX filing reframes the whole thing. It isn't just a software race anymore. It's an infrastructure race that now extends into orbit, literally into orbit. And it's happening on a scale that makes the .com boom look entirely modest. So the takeaway here, you got 3 companies, $3.5 trillion, all racing to go public at the exact same time. And the investor money is already moving away from OpenAI and towards Anthropic. When your AI tools change pricing, add restrictions, maybe even introduce ads, this is why. The scoreboard is being set and the smart money is already picking sides. All right, some fun stuff here. Let's get away from the numbers. Well, one more number that kind of says it all about where the AI market is right now. Anthropic, the company obviously behind Claude, just acquired a startup called Coefficient Bio. The price tag, $400 million, all in stock. It's a biotech startup, 8 months old, fewer than 10 employees, all former researchers from Genentech. No disclosed product, no disclosed revenue, no disclosed customers. $400 million for fewer people than it takes to field a baseball team. That's $44 million per employee. If your boss ever tells you people are the most valuable asset we have at this company, well, point them to this deal. The goal, according to Anthropic, is to embed Claude into biopharma research and development, drug discovery, clinical trial design, molecular modeling, and if it works, $400 million will make that look entirely cheap. But right now, the startup with no product, well, at least no disclosed product, just sold for a price of a sports franchise. And that's the AI talent market in one deal. No ceiling. All right, a few things to catch up on maybe for tomorrow. We have California Governor Gavin Newsom's AI executive order in California. It's obviously generating a lot of heat, and we've been holding on to that story for a little while now, so we may dip into it tomorrow. If the Pentagon's appeal of the Anthropic ruling moves forward, we'll also have that, and we'll also be tracking whether OpenAI's quote-unquote SPUD model gets an announcement. Sam Altman said a few weeks, 11 days ago, and the Microsoft Copilot paywall kicks in 9 days from now. Obviously, plenty to cover, so we'll see you tomorrow. And that's Morning Intelligence for Monday, April 6, 2026. If you like what you heard, hit subscribe from wherever you're listening. Share it with that one friend who keeps asking you, hey, what's going on in the world of AI? You know who they are. I'm Don Michalik. Thank you for tuning in and have a great start to your week.